Wonderful good day, ladies and gentlemen. Today we are at the Precious Metal Show here in Munich, and it's a bit different than last year. Less exhibitors, unfortunately, but still a lot of people this morning. And I'm very happy. My first interview partner here is Falco Resources, Trent Mell, the president and CEO of the company. Trent, great to have you here. Thank you very much.
I appreciate the opportunity. Thank you.
Falco Resources, two sentences. What are you doing? Where are you?
We are an exploration company. We got a large gold package in the Abitibi Greenstone Belt in Canada, and recently released a resource update, money in the bank, and pretty active today.
Super. That was quite fast. You know, first of all, I like money in the bank because those markets are killing us nearly. I think the last 7 to 10 days were horrible. What are your thoughts on that?
Yeah, it's a tough market. I hope we're bouncing off the bottom. I come from the operator side, so I can associate with some of the pain they're feeling. Being on the exploration side, we're funded now for the next year and a half or more, so we're somewhat immune to what's going on. Still, you hope that'll come back. I say good buying opportunities for those that are watching the market, however.
Yeah, but only for quality.
Only for quality, that's right, that's right. We'll be one of the last standing, I would hope, in this market.
So let's come to the quality of your company. You said you're well financed. First of all, what is money in the bank?
Yeah, we've got $12.1 million in the bank right now. We closed the financing a few weeks ago, so we were fortunate that we missed this recent downtrend.
Super. And what is the burn rate?
Burn rate, we're going to spend, well, we've spent $6.5 million over our first 2 years. So it's a new company working on a 100-year-old asset. So over the next year, that'll accelerate. We're going to be one of the few juniors that's actually going to increase our activity. Budget next year, probably $8 to $9 million.
Yeah. Also, I think you are the most efficient exploration company in the world because you did with $500,000, 2.8 million ounces of gold equivalent. It's outstanding. You have 305,000 meters of drill core, and it's spaced in 15 meters. That's what I can remember. And it's amazing what you have there.
Yeah, our core asset is what Noranda Mining Company got started with. It's the Horn Mine in Rouyn-Noranda, my home province of Quebec. And using historic data, it came out to an 18 cents per ounce discovery cost to basically bring forward work that was already done. The global average today is $40 an ounce, so very efficient on our part.
Absolutely. When I look at your presentation and on the map, I see something like 11 mines that you have already on the property. It's 73,000 hectares. It's enormous. Do you want, or are you able to bring one of the mines into production, or you want to spin out? What are the plans?
Yeah, we're in a fortunate position. We're in the one area in the Abitibi that has never been controlled or explored by a gold company because it was Noranda, most recently Glencore. There's a smelter there. The opportunities there, 14 former producers, as you point to, base metals and gold. So as the whole camp has been rejuvenated from Timmins in the west to Val-d'Or in the east, this is the one area over the last 20 years that has been overlooked. So we're in there now looking at the Horn Mine in particular, which we got 2.8 million gold equivalent ounces today. That'll go to 3.5 if we can pull off the confirmatory drill program we expect. There's upside beyond that. The objective there is 5 million ounces, and that becomes a real viable project on a global scale. The rest of the land package, I think you're bang on. Rather than be issuing treasury shares every year to finance, if we could find ways to leverage our 728 square kilometers, joint ventures, sales, options, tough times now, but we do the exploration work, find opportunities, and that could help fund our project.
So all options are open.
Yeah, we're lucky that way, yes.
Great. Well, I presume with the 2.8 million ounces you have so far, I read also that you want to update the resource. Can you say something about for next year? What is expected maybe? Yeah,
we're going to be starting any day now. In fact, we got a confirmation drill program that'll be getting underway. So if we can confirm historic data with some current drilling, it allows you to be maybe less conservative with your assumptions or more modern day with your metallurgical assumptions and so forth. Silver was never included. We know it's in the deposit. So things like that should allow us to go from 2.8 to as much as 3.7 purely on a confirmation basis. But with a full treasury, we also want to test the strike length because there's gold mineralization, we believe, outside the envelope that is known. I mean, in fact, we've got data that suggests there are a number of gold-rich areas that were never further explored because they were poor in base metals, which is what Noranda was pursuing. So that's the start. 5 million, I think, is a realistic goal. If we can get there next year, that would be great. If not, a year later, and then we'll go to economic analysis.
Well, 5 million ounces would be still alone good for one company, and you have that much in the backyard, so we can easily make 3 to 5 companies out of you.
That's right. I mean, I like to say that as a junior mining company, we have no business owning as much land as we do. We were lucky that we acquired this 2 years ago when nobody else was doing deals. and we'll take this as far as we can.
Perfect. And one of my also high-valued interview partners in the last month is Shaw Rosen, joined your company. I met him several times this year and did interviews with him. I really like him a lot. He's such a great expert at what he did with Malartic. I think it's phenomenal. And he came into you. I think he's in the board, and he joined you in the financing also, right?
He did, yes. So Sean is invested personally, he and his team, but their Cisco Royalties company owns 12% of Falco. So they've been there from the beginning. They believe in the camp. This is another camp play, much like Malartic. So I think there's some parallels. We're 40 minutes away from the mine that they built it for $1 billion. They sold it for $4 billion. The one big M&A deal of the year. I've known Sean for a number of years. He is a great resource person, great capital markets guy, and as chairman of our board, it's a good vote of confidence, I think, in our strategy, but also it's a good partner to help us as management execute our plan.
Yeah, that's right. And he likes good food and wine like I do.
No doubt.
Well, Trent, thank you very much for that, and keep fingers crossed and all the best for it. And I think it's a perfect sign of trust and confidence also when Sean and his team is joining you guys. And as you said, 12% with Cisco Royalty has into your company. I think that's outstanding, and the guys did the proof of concept, and I hope they will do it with you also.
Thank you. I appreciate the time to talk today.
Thank you. Yeah, ladies and gentlemen, it was Trent Mell, the president and CEO of Falco Resources. Well, you heard it, $12.5 million in the bank, land package of 73,000 hectares, and the good news is they have already 2.8 million ounces gold equivalent and will to bring it up next year, bring the update, and hopefully they go from the, let's say, 3.5 to 4 over to the 5 million then. We will see, we will report about it. Check out the company. Thanks and bye-bye from Munich.